They say the market climbs a wall of worry, and today was a perfect example. G'day everyone, I'm from V2U Research. Welcome to the ultimate deep dive analysis of the ASX200 for February 13th, 2026. If you want to understand the why behind the moves, you're in the right place. Let's start with the hard numbers. The S&P ASX200 index closed lower today, ending the session at 8,917.60. That represents a drop of 125.90 points or 1.39% now. Seeing red on the screen can be scary, but this correction kicked in right at short-term resistance levels. In plain English, the market ran a marathon and just needed to catch its breath. Zooming out is your superpower. Despite today's drop over the last 5 days, the index is actually up by 2.40% overall. We are currently sitting just over 2% off its 52-week high. This isn't a crash, it's a consolidation within a very strong bullish trend. Don't let one red day ruin your perspective of a green week. Let's talk technicals. The index is trading above a key demand zone between 8,672 and 8,708. Imagine this zone as a trampoline. Every time the price falls to this level this month, buyers have stepped in to bounce it back up. As long as we stay above this floor, the structural integrity of this market rally remains intact. On the flip side, we have a resistance ceiling around 9,083 to 9,115. This is where sellers are currently parked taking profits. Breaking through this ceiling requires fresh momentum, usually from a positive news catalyst, to push the index to new all-time highs. Now, looking at momentum. The 14-day RSI is at 53.75. Think of the RSI like the speedometer in your car. 0 is a standstill, 100 is redlining. At 53, we are cruising at a safe, sustainable speed. We aren't speeding, which means overbought, and we aren't stalling, which means oversold. This neutral reading suggests the market is waiting for its next direction. Today gave us a classic lesson in sector rotation. When investors get nervous, they sell high-growth, risky sectors like tech and move money into boring, safe sectors. That's why we saw information technology and healthcare lead the declines today. The smart money was taking chips off the table in the risky areas. And where did that money go? Straight into utilities. The sector rose a massive 3.38%. Why? Because no matter what the stock market does, people still need electricity and water. In finance, we call this a defensive play. It's the safe harbor investors seek when the seas get choppy. Looking at individual names, AMP Limited and GQG Partners defied the gravity of the market, gaining nearly 9% and 8% respectively. This proves that stock selection matters. Even in a sea of red, high-quality companies with their own positive catalysts can still swim upstream. Conversely, Austal and Nick Scali plummeted over 22%. For beginners, a drop this sharp is usually a warning sign, not a discount. It's what we call catching a falling knife. Always wait for stabilization before trying to buy into a steep drop like this. Risk management is rule number 1. This is exactly where our V2U Insight engine comes in. Markets are 10% data and 90% psychology. We help you separate the emotional noise, the fear of missing out, or the panic of a drop, from the cold, hard structural facts of the market. Discipline beats emotion every single time. So, what's next? All eyes are on the US CPI data. Here's your scenario plan. If inflation comes in hot, expect more volatility and downward pressure on tech. If it comes in cool, we could see that resistance ceiling of 9,100 shatter as the rally resumes. We are watching this pivot point closely. We want to build the smartest investing community in Australia, so tell me in the comments. Are you buying this dip or waiting for the CPI data? I'll be replying to your comments below. If you learned something today, smash that like button and subscribe for your daily edge. Trade safe, and I'll see you next time.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Security, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.